President-elect Donald Trump wants to impose big tariffs on some of America's biggest trading partners on his first day in office. Trump sees these tariffs as a tool to help the U.S. achieve key economic and social goals, but a majority of consumers worry that his proposal will add to the rising cost of goods. On this, IBD explains we talk Trump tariffs and what they mean for the markets and investors. And here with me to break things down is IBD News editor Ed Carson. So, Ed, we've seen a lot of headlines, but what's actually on the table here? What are the tariffs that Trump is actually proposing?
Well, just this week, he proposed new tariffs, a 10% tariff hike on Chinese goods, and that's on top of all the tariffs in his previous term, which were mostly held by Biden and maybe have expanded, and then 25% tariffs against Canada and Mexico, even though we have a U.S. and Mexico-Canada agreement that was basically the Trump negotiated replacement to NAFTA. So I think that was more of the surprise because he hadn't really talked about Canada and Mexico specifically like that. One issue there is that he wants to stop the flow of fentanyl into the U.S. and as well, and then from Canada and Mexico, maybe illegal migrants. So that would be, this may be just a negotiating tactic. Can you get, it's hard to know with fentanyl because it's so easy. It's just like a suitcase worth of fentanyl it can be just massive. It's not like pot or some other things where you need real quantities, but illegal, you can imagine Mexico maybe taking steps on illegal migrants that then Trump says, aha, that's enough, I won't do it, or whatnot. So it's hard to know what is going to be there. I think Wall Street has taken it in stride in part because they're thinking, well, we're going to take a wait and see approach. Let's see what he actually does rather than a wait and hear approach and focus on what he says. We want to see what he does.
So, as you're looking out at the landscape here, then just based on what's been said, what do you think are some of the sectors or industries that could be most impacted by this?
Well, the auto industry is definitely one that is going to be impacted. I mean, GM and Ford in particular, they have a lot of look. There's plants in Canada, there's plants in Mexico, either full-on assembly plants or just a lot of parts, or things may come in through those areas. And so that is a big deal. That's really that could add and then indirectly, if steel prices become more expensive, even the stuff that's done in the US, those prices might go up because either those inputs are up or because domestic competitive producers have less competition and they raise their prices. So I saw estimates that GM and Ford cars, that might be an extra $3,000 cost, and that's a big increase for those automakers. Home builders and construction could be another one. Both, lumber. We get a lot of lumber from Canada, some other building materials, and if you put that in conjunction with maybe tighter immigration controls, let's be fair, like a lot of illegal migrants work in the construction industry, and so that could mean higher costs in that way. So those are a couple areas that could be affected, but it seems like autos is the most affected right now.
And Ed, how have you seen the market react to this news? And I'm also interested too if you've seen any impact on China stocks.
Well, on the U.S. markets, it was interesting. There was overnight when Trump made this argument, there seemed to be futures down a little bit, but not that much. And then markets sort of shrugged it off. It doesn't seem like it's had much impact. Again, as I was trying to say, like they don't seem to really be. They don't know if Trump will really carry out with these tariffs. And he's also talked about other things like that a 20% universal tariff, and then 60% on China specifically. So we haven't gotten that yet. We don't know what's going to come through on China's side. He said 60%. So a 10% hike probably doesn't surprise anybody. I mean, there's going to be China tariff hikes. That feels like regardless of anything else, there's not going to be much pushback there, even though, yes, that will result in price hikes. Yes, that will do but so it didn't have a huge impact on China. I think there was some drawdown. There's also concerns about stimulus there and about its weak economy. So there's a lot of different things going on. It's having a negative impact, but I think people also knew that there was going to be a negative impact. And you've seen Chinese stocks struggle since November 5th when Donald Trump won the election, whereas US stocks have generally taken off.
And what has the reaction been from the business community? Because we see one of the arguments against these tariffs is that it's going to just raise the cost of prices and pass it along to consumers. There was a recent survey that just came out before Thanksgiving that showed that two-thirds of consumers think that this proposal is just going to add to the cost of goods. So, what has the reaction been in that community?
Yeah, I mean, I think you're gonna see, I mean, Walmart, came out and has said like, yeah, this is tariffs are gonna be higher tariffs would have an impact. They import a lot of things, even though a lot of their goods are in the US. So you're gonna see that. There's concerns. I think they're trying to be relatively quiet. They don't want to, honestly, they don't want to anger Donald Trump and his fans. They don't want to do that unnecessarily. They're going to wait and see how that impacts. And just with other things, I mean, they will, if they do raise prices, they're going to make sure they're going to say it's tariffs. They'll make sure they say that because they're going to get, we've seen all these complaints. So we saw that during the Biden, administration. When the prices went up, they would say, well, it's this reason, that reason. It's not our fault. We have no choice because people would say, oh, it's greedflation. But these businesses, are definitely going to try to pin it on tariffs as well.
So, Ed, as you mentioned, and we're kind of in a wait and see mode here because this could all just be a negotiation tactic. We're not really sure what the final tariff picture here will look like. So, what should investors be looking for as the story develops?
I mean, we also have to balance out to what extent are tariffs actually going to happen? To what extent are we going to see tax cuts and deregulation? I mean, there's reasons why the market rallied on Trump's victory, even though they knew tariffs were probably coming, which Wall Street doesn't really want. I mean, obviously, there's going to be some companies that benefit here and there, but generally didn't want that. But if so, there's going to be that offset back and forth. And so you just have to watch it and look in there and say, and it could be that there's certain sectors are going to be hit harder. And so you definitely want to be watching those sectors just as when bond yields rose in October and November, yeah, certain sectors were getting hit first because they're more sensitive. There's going to be some that are more sensitive to tariffs. Have to watch out to see what the retaliation is. If we do big sweeping tariffs, are we going to see our trading partners, not just China, but Europe and Canada and Mexico, are they going to raise tariffs? And there's just a back and forth. As that hit things, but those are all these kind of confluences. And that what's nice about the market is that you just watch it. And the market, may be forward looking and may be behind the curve at times, but you pay attention to the market. If the market starts selling off, whether you want to pin it on tariffs or whether you want to pin it on whatever thing, I mean, you have to react to that. Don't let your own opinion try to impose that. Well, I think tariffs are this, I think tariffs are that. It's like, no, no, your money is moving on one way, and so you pay attention to what the market does.
All right, Ed. Well, always a good reminder to tune out the noise and to stick to the charts. Thank you so much for your insights today.
Thank you very much.